So I have Brandon and Mike with Lafayette today with us, and they're going to be going over the heritage product that they have. It's a whole life product, and I will let you guys go ahead and explain that. Take it from here. Good morning, Mike.
Hey, good morning, and thank you for having us on the webinar today. Really appreciate it. So, again, my name is Mike Gerlach. I manage all the training and support for both Lafayette Life and our sister company, Columbus Life, as well. Today, what we're here to talk about is our Heritage 2025 product. So, for those of you familiar with Lafayette Life, we had a previous version of this back in 2022. We changed it in 2025 to make it a little bit more competitive. Some changes we'll go over a little bit later that really benefited the product. And this is going to be it's not so much a early cash value sort of product. It does have a good cash value. It's more designed towards the death benefit. And we'll talk about how you can use that in competitive scenarios, talk about what's changed back in 2025 and going forward. And again, who the ideal clientele might be for this product. So we'll look at some competitive scenarios. We'll look at some case studies as well. But before that, just kind of want to introduce the product here, and I'll share my screen. Let me see if I can take off the video too, so you don't have to stare at my ugly mug the whole time here. All right. And just a quick thumbs up. Can you see my screen? Perfect. All right. So again, the Heritage 2022, this was a product that Lafayette Life has had. This is a pay to age 100 whole life solution. This is really designed at providing a low cost per thousand permanent death benefit solution. The base policy was non-participating. Did have some PUAs though that you could earn dividends on. Heritage 2025 though, it really builds upon that same protection focused approach though. So again, if you're already familiar with the Heritage 2022, it's the same product, but with even more to love. So let's look at some of the changes that we had with the Heritage product. So first thing I want to point out is the non-forfeiture rates increased from 3.75% up to 4.5. So that's really important, but what does that mean exactly? Well, for a smaller premium and lower guaranteed cash value, that allows for more cash value more death benefit in the product for a smaller premium. Smaller dividends, smaller increases in the premium for the MEC limits as well. The other big thing on this too, you can see the premiums, they dropped about 3 to 8% across the board, depending upon the scenarios with different clients there. It did move from a non-participating to a participating policy as well. So that's huge for the cash value on that non-guaranteed side. And we'll look at that on a case study a little bit later. So one other thing I want to talk about is kind of the changes to the 7702 ruling as well. So Brandon's going to talk to you a little bit more about that on some of those non-forfeiture rates. So Brandon?
Yeah. Sorry for the really cool transition there. Oh, we probably aren't on camera. Sorry about that. So if we're taking a look at this, really we want to understand what is Section 7702. So Mike talked a little bit about non-forfeiture options changing from 3.75 to 4.5. This is going to be how the IRS deems what is considered life insurance, and more importantly, how it's going to be taxed. So in order to qualify for Section 7702's life insurance definition, it's got to pass either the 7702 cash value accumulation test, or the CVAT, as some of my actuarial friends like to say, or the 7702 guideline premium test. So when we look at what is Section 7702, if we look at the guideline level annual premium, you're going to see directly from Section 7702 from the IRS code, it's the level annual amount payable over a period not ending before the insured attains age 95, computed on the same basis but using a minimum interest rate of 4. Okay, so that is the old ruling from prior to the Consolidated Appropriations Act of 2020. If you've been in the industry for a little bit, you remember the Consolidated Appropriations Act changed a lot of stuff about life insurance, mainly driven around the non-forfeiture options because we were in such a low interest rate period for a prolonged period of time that insurance companies and the investment market as a whole were looking at some reprieves because we had low interest rates. Now, as soon as that happened, interest rates started to rise, all that good stuff. So we're seeing some benefits in the market. But this allowed insurance companies to drop their non-forfeiture rates down to as low as 2. And I believe, yeah, okay. So down to as low as 2 and no more than 3.75. Okay. So right there, that is the first change that happened in 2020. And so what changed recently is that upper number has become a floating number that as rates increase, that number can go up. So last year we saw our first increase. So now we can go no less than 2% and no more than 4.5%. Okay. So now prior to this, we could go between 2 and 3.75. Now we can go between 2 and 4.5%. Okay. So, kind of talking about a little bit about what Mike was talking about earlier, why would a carrier use lower rates versus higher rates? It's really up to the carrier. Lafayette Life, in our perspective, all of our accumulation products are using a 2% non-forfeiture rate. So, policies using those lower rates towards that 2% will have larger premiums. So, death benefit will be more expensive, but you're going to have higher guaranteed cash values and also the potential for larger dividends. You're also going to see larger increases in MEC premium and premium limits. So if you're using a Patriot, which is our flagship product with an LPUA, you're going to see really good accumulation rates on this. Okay. So with Heritage, what you're going to see is that uses a higher rate, now using a 4.5% non-forfeiture rate. So you're going to see smaller premiums. So when Mike talks about competition in a little bit, you'll see how inexpensive the Heritage is, and you get a lot of bang for your buck on death benefit. With it being participating now, you get dividends again, which is going to be a non-guaranteed element of a whole life plan. My wife actually works in compliance here, so I'd be remiss to say dividends are not guaranteed, just in case she is listening. Dividends aren't guaranteed, but we've paid them every year since we were founded. And so with the reintroduction of dividends, that'll help increase some of that non-guaranteed death benefit and non-guaranteed cash value as well. And then also too, you can see increases in the MEC premium as well for the Heritage also. So you can get, you can pair this up with an LPUA or an FPUA rider, which is our paid up additions riders that we have. We can talk about it at a later time to really help jumpstart some of the non-guaranteed cash value on here. So once again, policies that use that lower rate, we're going to be more accumulation focused. Policies that go more towards that 4.5% rate, those are going to be more on the protection based whole life chassis there. So with that, I've yelled at you all a lot about non-forfeiture rates. I'll hand it back over to Mike to talk about a case study. Mike, thanks.
All right. Thank you, Brandon. So again, to kind of summarize what we talked about there real quick before we get to the case study. So Heritage, it's really geared more towards the premium and death benefit efficiency there, more than the cash value. It does have cash value in there, but again, it's more on that death benefit side. So the key question for, clientele to find the right client for this is, what do they value more? Is it the protection or the maximum guaranteed accumulation with other products? If it's protection or it's kind of a balance between the two, Heritage would kind of be that right solution that we can kind of look at that point. So the potential clients there, they're focused on that permanent death benefit rather than maximizing that early cash value. But again, let's see this in action and see how this would perform for our client here, Blake. So Blake, 45 years old. We have him at a preferred non-tobacco rate, pretty healthy. He wants $1 million of permanent coverage of death benefit. He also wants that potential for death benefit growth and cash value as well. He's considering that whole life as an alternative to, let's say, a GUL, so the guaranteed universal life. So this is a protection first client who wants additional long-term value as well. So again, this is a sort of GUL alternative story that we're kind of telling here. Potential client fit here is high income professional. Maybe it's a business owner, legacy forward sort of clients seeking substantial permanent coverage here. So in this example, if we're looking at the previous product versus the 2025 version, we're using the same premium, but the difference comes in there on the death benefit side. You'll see it's about $45,000 higher, $35,000 higher on the Heritage 2025 version versus the 2022. So again, kind of showing you what those non-forfeiture rates, what the changes did there. We're getting for the same amount of premium, a higher death benefit. It's at $1 million on the 2025 version. Now, the cash value, 20 year or 30 years down the line, you'll see it's only $9,000 less, but it is lower there. Again, because of the changes we made. So we're gearing more towards the death benefit side than towards the short-term or even long-term cash value scenario. If we looked at it a little bit further, though, let's say we're looking here now, again, $13,370. This is on the non-guaranteed side of things. So this shows you the death benefit and cash value for Heritage 2022. On the non-guaranteed death benefit, it's be about 965. Cash value about 501,000. Now, when we're talking about the non-guaranteed side of things, we're factoring, those dividends, other things that are, again, not just the guaranteed side, but the non-guaranteed. It bumps up the face amount by about $31,000. And now we're seeing a $10,000, more than $10,000 increase on that guaranteed cash value side there. And that again is in year 30. So those dividends that participating that the 2025 now takes part in really makes a difference on the non-guaranteed side. But rather than just look at it, comparing the two products, let's see an actual competitive scenario and see how we stack up to the competition when it comes to this product. So this table here outlines the Heritage 2025 against some of the common competitors, our core competitors with a true life pay to age 100. And as you can see, for that same $1 million of death benefit, so that's what we're solving for. It's a male, 45 preferred, full pay, $1 million death benefit, what the premium is going to look like. And we are really well positioned here with the lowest premium on the slide. So $13,370. The next closest is about $700 higher almost at that point with Penn Mutual. If we look at other carriers, though, you're going to see that they do have a higher cash value, right? If we look at the cash value in year 10, in year 20, year 30, yeah, it's going to be higher with those other carriers on most scenarios. But also take into consideration there that the carrier paying the highest premium, 16,800, it's about $49,000 higher. But again, you're paying $3,500 more for that. If we're doing a true apples for apples comparison and bumping up that premium, that cash value is going to get a little bit closer. And again, this is geared more towards the death benefit play than cash value. It's nice to have the cash value, but when we're factoring in that we really just want a low cost death benefit with some just in case funds, the Heritage is really going to win out on this product. So again, lowest premium in comparison for that $1 million of coverage. Doesn't have the highest guaranteed death benefit or cash value at every duration, but it does have the strongest position of death benefit efficiency here. So this is where Heritage can really stand out when premium is important to that decision there. If you're looking for the lowest cost, it's really a GUL alternative here. Could be a great case for estate or legacy funding. Maybe we're dealing with a buy-sell sort of situation or business succession needs. Clients that have a specific permanent death benefit target in mind. Or maybe cases we previously lost because the whole life premiums were too high. So if someone in the past was looking at the 2022, thought premiums were too high, now may be a good time to reconnect with them with these lower premiums and seeing if this is a good option for them. So again, it's a buyer who's prioritizing the permanent protection and that premium efficiency over that maximum guaranteed cash value accumulation that we may look for on, another product within Lafayette Life's arsenal there. So this really, like I said, is getting you a good death benefit for a low cost premium when we're looking at those other core competitors out there. So I know we went through that pretty quickly there. So we'll open it up for any questions you guys may have. But again, this is a good opportunity to review with any current GUL cases you might be working on, whole life cases that maybe you lost on premium in the past. or clients needing substantial permanent death benefit, that could be a good fit here. And really, the 2025 story is very simple. It's protection focused whole life product that's designed to provide you a competitive amount of permanent death benefit for the premium that you're working with, while adding that participating policy potential as well. So, any questions that you guys may have about the Heritage 2025?
I don't see any questions that came through, but I actually have a couple of questions that I know that I usually get asked in agent
Yeah.
service. So, so first is the health qualifications. Like, what does the underwriting look like for this product? And also, is it e-app only, or is there a paper application for this product?
Yeah, so those are great first questions there. So this is a product that is any way you want to submit the application, we'll take it.
Okay.
So
Okay.
you can do paper, you can do e-app, all that good stuff. Now this is going to be a full underwriting a full underwriting product. So it's going to be clients that want to qualify for something a little bit more than simplified issue or final expense. Because if you go through underwriting, there's probably going to be a benefit of either a lower premium or a higher cash value. I know for our simplified issue friends, some of those times, it does have a cash value, but it's not as high as what it could be. So we do have an accelerated plan that gets you up to $1 million worth of death benefit on a simplified issue case from ages 18 to roughly 60-ish, up to $1 million. And that's our total underwriting amount. So if your client's in reasonably good health, there's some knockouts there we can get to over to you. But if they're in reasonably good health and good financial shape, sometimes we can get that through an accelerated underwriting feature. And then finally, we also do both good old-fashioned paper delivery, or you can even do e-delivery if your client just wants that PDF copy.
Yeah, yeah, I know that we still have a lot of clients that do like to get the paper copy. So that's good to know as well.
Yeah.
So I don't see any questions.
I
So
think one thing to add too is, this product does include living benefits as well, which, is always
oh,
something important with these, when we're
yes,
talking about
yes.
products as well. So Lafayette Life does take a different approach than most carriers with, instead of using a discount death benefit method, it is kind of more of a lean method, a formula method that we have on there that's really simple, easy to understand. And, if we want to talk more about that, you can always call into the sales desk number on the screen or email over. Or we can set up another webinar to kind of go over more in depth about the living benefits.
Okay,
But
and is that
again,
like built into the policy, or is this like a rider that's added onto it?
it's a rider. It's
Okay.
not going to have any additional cost there, though. It's going to be included on every policy,
Oh,
subject
awesome.
to underwriting. If
Okay.
there's a table rating that we're working with, it may disqualify, some clients from the full version of it. It may just
Okay.
be terminal. But
Okay.
if we're dealing with a healthy client like we looked at before, it's going to have the chronic, the critical, and the terminal illness all on there as well, with the
Oh,
remaining death benefit once you access it as well.
oh, awesome. Okay, that's great. All right. Well, you guys, if you want to get contracted to be able to sell this great product, of course, you need to reach out to us and we will be more than happy to help get you guys contracted. Um, and it doesn't look like I have any other questions. So I do thank you guys so much for being here with us today and going over this product. And thank you guys for being with us and taking time out of your day to learn about this product. And I hope everyone has a great rest of their day.
All right. Well, thank you, everyone. Have a great rest of your day.
Thank you. You too.